Okay, good evening, everybody. 7:55 p.m. Eastern Time. Wednesday, September 28th, not 29th. Should be the 28th. Wednesday, September 28th, 2022. 2022. 7:55 p.m. Eastern Time. Chad Trades here. CHADX. Trades. ADX is the indicator we are using. We are trading Forex, foreign currency, silver. We're excited because our phone died and we're filming right now off of the tablet. And we're in the bando, so there's no electricity to charge it. The gadgets, charge them, or charge the phone, right? Or the tablet, right? And we don't have the chargers on us anyway, so we're just filming out the window, so there's a little bit of light. That's why we're not filming ourselves. But that's good because now you can kind of envision the chart in between the trees. So we'll just kind of do it like that. I'm going to show you what the chart is looking like based on the blinds. This is crazy. This is why Isaiah calls me the Rain Man. I'm about to break down a chart based on these lines. Using these lines, we're going to break down. These lines are going to represent whatever I need them to represent at the time I'm speaking about those lines. In that form of representation, right? So, in the representative form, what Dr. Clark from Salem taught us to do, remove the word that, those kind of words, and just say what you mean. That beat around the bush with words like that. Just say it. So that's why I replaced that with such things must be said. So if this were your chart, we're trading silver. We're selling silver long term. We're gonna sell it from from $19.80, right? We're gonna sell it twice. We have a trade enough for us to sell it from there, but we're buying it from where it was at when the indicators went positive. So the price at that moment was 18.8. No, it was 19. No, it was 18 point. Yeah, because we're waiting for it to go to 18.98, basically $19 even. So from there, we're gonna sell down twice. The hourly candle was looking like it was white. So the 7 o'clock candle, so around 7:23 p.m. Eastern Time, the 7 o'clock candle was looking like it was white. So we went to the 30-minute, the 15-minute, same thing. They were real small, look white. Okay. Went to the 5-minute, the 1-minute. Yeah, the osmonds are positive, both of them. Yeah, that's gonna drag over to the 15-minute, possibly. So that 5-minute osmond is gonna last a good hour at least. So 7 o'clock being in between the 5 p.m. and the 9 p.m. 4-hour candle, which is the first 4-hour candle of the daily candle, which starts therefore at 5 p.m. Eastern Time. So your daily candle just started at 5. Daily candle started off selling because it was selling from the last 2 hours of the last candle before the daily candle, which would have been the 1 p.m. Eastern Time to 5 p.m. Eastern Time daily candle or 4-hour candle. During the 3 p.m. block, the second half, basically 2 hours into the 1 to 5 p.m. 4-hour candle, at 3 p.m., the price of silver dropped down. It dropped down from, I guess it was going up until 3 p.m. So this is basically a trade from 3 p.m. to 3 p.m. You make a few trades in between that, but it's a one trade from 3 p.m. to 3 p.m. And in between that trade, though, if you can't make it at that time, you have to get back to that price. So maybe around halfway through the 5 p.m. to 9 p.m. candle, which would be 7 p.m. just now, catching the buy back up to that point of the 3 p.m. hourly candle, where the 1 to 5 hourly candle maxed out and started to chase and go into the the trend. So we're selling from the 30-minute chart. So we're gonna sell from the top price level. Now, by the time we got the money in our account, because we had to send Bitcoin, if it was Dogecoin being sent by Isaiah or Jason, then, or if I had the money on my card to do it, then the trade really right when it started, a few minutes after. It's been good. And then maybe realize this and like, yeah, it's about to retrace. And then have no choice but to catch the retrace because the osmos are positive. Just follow the osmo, follow the ADS. You follow the osmo to the ADS. These are the indicators that we're using. Now we're going to explain them. So you have your osmo. The osmo stands for the oscillating or the oscillation or the oscillators of the moving averages. The moving averages, this goes back to simple math of mean, median, range, average, mean, average, median, mode, range, all of those things. This is what that is. Study that and you will get this. That is what you study simple math. Real talk, this is simple math. Alright, so look. That's how you get to the arithmetic. And by arithmetic, we mean billions and billions of dollars earning power every year. This is crazy. This is the legacy that we left behind to the world. It's crazy. The entire world would have to change after I did what I did. Oh. And I hit my chin when I did that. On headphones. Big headphones. The kinds you don't. Blah, 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 blah. Alright, anyway. So look. The charts. We have the charts, right? These are your charts. Now, we're going to sell silver down from the top price level on the 30-minute chart on investing.com or on your MetaTrader. Now, I'll explain what to look for in both of them, right? Because on investing.com, you don't have your RVI, so that's what MetaTrader is for, your RVI. But you can add your own custom moving averages to your chart. And Alligator, which is not on investing.com, the averages go from 5 to 200, so you can add over 200, 250, 300, 350, 400. You can stop there, you're good. By the time it's 500, that's the other chart, because 400 is the other chart, basically. It is 400, that's the other chart. It's on the other chart. So 350 is about the top. It'll hit, especially for silver. 350, maybe for Forex, just, 300 the tops, not just 200, but between 200 and 300 should be good. But silver, yeah, let me say, it's going to push 350. It's going to touch 350. The name for 350 is Latrice, the twin sister of Clarice. So we're waiting for Latrice and Clarice to be hit, right? Once Clarice is hit, you start to get into your trade the opposite way. Then once Latrice is hit, then you get into it more. So you just get into it one time, and you just hold the trades on the way to Latrice. So from there, that's how you would do it on your moving averages. And from there, you would catch it there, and you would hold it because by the time it is there, you're waiting for the ADS on the 30-minute to be over 70. That's the top. The range for the ADS indicator is going to be 20 all the way to 70. That's a 50-point range on the indicator. That's an indicator point. That's something we have to stress. It's an indicator point. I'll come up with a better name for it at some point, but that's the indicator point. It's the indie point. That point is independent, of the price. Like, it's 10 points. Those 50 points are going to be a lot of points on the actual chart, pips. Because the points go into pips, 100 points, 10 pips. So, could be smooth, 10 pips. So, boom, that's pretty much what it was, 15. That 20 to 70. If you combine that with the moving averages chart on investing.com or the MetaTrader chart of price levels, just the main chart, just without all the indicators, just looking at the actual price levels only, all the way to the right side. If you do it like that, then you're just going to the top price level. That's going to be your 200. It's going to bounce up your 200. So, like that should be past your 200 at that point. And based on what the chart was, yeah, the 200 wasn't the top price level. Anyway, it was pretty sure it was higher. So we'll check it in a minute. But anyway, we have it set to get out at 980, and the top price level says 985. So just right there, right under it, get out, and you get in twice for the sales down. We have the take profit set for those sales, I believe. Now we'll put them for $17.80 because it's supposed to go down back to 17.70. So 17.80 we're out. That's going to be a $120 move. 100. Yeah, because we could have got the extra $10 or whatever, but $120 move. That's good. Get out there, buy it back up to about 1890. You know what I'm saying? 1898. 19 basically. And that's our trade. So starting off with Australian dollars. So, we hit the chart. First thing we did was we went to the demo, and we already had demo trades in for the last half an hour, or whatnot, right? And the demo trades were reflecting the sales that were in profit, and they were still in profit. So we went and placed new trades both ways to gauge it, so we know what to look for on the chart. So we know what the winner is. We're just confirming it with the charts. The winner of the demo is this right here. Now, why is it the winner? Now look at everything so we can figure it out. All right, it's winning because this is winning, and it's gonna go up to this and this and that. So boom. That's what we did. When we did the demo, knew what was winning. Yo, we caught the sell signal anyway. We were calling it to Isaiah, Pipe, John, Nato, everybody that we know that trades, right? So sending out signals, yo, sell signal, sell signal. I'm trying to tell you about the ADX, 30 minute. So based on that, that can go for any chart. So boom, in 1 minute, 5 minute, ADX, switching over. So that's what we do, because in between your 4 hour candles, when you get in at the beginning of the 4 hour candle, somewhere in between that time and the 4 hour candle is over, somewhere after halfway through, about the last hour and a half, last hour, you'll find it retraced it back to your starting point. Because don't you always notice when you get into the profit trade, even when you come back 4 hours later, it will have been back to the point where it started and or close. At least on that first wave, when you first get into the trade, that Elliott wave would basically, I'm describing the Elliott wave to you. This is the oasis that everyone talks about. This is the Bermuda Triangle of profits. Just to take you to the land of profits, real talk. This is the wormhole of profits right here. This is what I am telling you. Like, I am the white rabbit. You know what I'm saying? Like, I'm the white rabbit, bro, of the matrix. This is the economic matrix we live in, and I am the white rabbit. I am the white rabbit. You cannot get out of the economic matrix without following the trail I have left behind. In some form, whether you have found the trail or not, it will have been the same path at some point. Something about the path, even if it wasn't even in this industry, but still, this is the path out of the economic matrix, and I broke it, cracked it, and you all enjoy it as long as you can before they change it, so, but it should be an interesting game because, I know I'm going to die, so it's not like that, so, I should be good, so just keep this legacy going, and, I'm going to die a hero, and then be remembered as a legend, and a hero in real life, actually, real life hero. That's how I died, being a hero. So, it is what it is. So, it's crazy. That's all I can say. Just die a hero. And, yeah, So until then, we have a lot of work to do, bro. So that's the move. We're gonna get ready to go home and see what's up, and just pray it went well, because we knew the long term, we're gonna sell. But based on the charts right now, man, based on the rules, the indicators we're looking at, we're going off for the 30-minute chart. But based on the 1 minute and 5 minute right now, the actual osmonds, they're positive, and it's hourly candle, like it fits what you see every day. It's like halfway through the 4 hour candle, it's gonna retrace. Well, here's your little, retrace. This is the first wave. So, because you go in the wrong way at the beginning of the 4 hour candle in the first 2 hours, first half of the 4 hour candle, you go the wrong way. It won't last to the halfway mark, 2 hour mark, you might be crashed out. If you start with just the bare minimum, that's all you have. 2 ways, like do or die, Russian roulette. Real talk, like that's how you trade. Russian roulette, basically. It's do or die. It's like, yo, I'm gonna spin it, and then boom. It's like, and if you know what I'm saying, if it don't, you get paid. Dollars pop out. You know what I'm saying? It's crazy. Like to the account. Like that's how I trade. It's a Russian roulette kind of thing, but it's really blackjack. So it's a Russian roulette because it's Russian roulette. So it's like you say roulette. It's like roulette and blackjack technique. So like violent with what I'm saying. It's just mean like if you get it wrong, it's Russian roulette. You know what I'm saying? You're gonna blow up your account. Like there's no better way to say it. Like like I shouldn't be able to illustrate that words to you. Like that has to be done better. Like you're gonna be jumping out the window if you go against a 4 hour candle at the beginning of the 4 hour candle. So halfway through the 4 hour candle, you could possibly go against it only because it would like retrace. Especially if it's that first wave. So that's what we're studying and filming right now. So we just keep it right there. That's where I'm going to end my hypothesis. My hypothesis is that silver is selling from 18.9 or 19 even. And from there, we are going to go down and back to 18.70 and in and out of our trades at 18.80. And any trades we do in between will have to be just the way we did just now, where it might have to be a two-part play, real talk, two-part move, real two-part strategy. We are selling long term, but we're at the short right now to the selling point. We're not able to sell from the selling point right now. It's not there, but we have to sell long term. If we sell long term right now, it could possibly crash. You just go very much against like easily $10, $15, and that's all we have. That's a crash. We can't even afford that. That's the whole point of the whole Russian roulette strategy of the training method of the psychology. It's the psychology, so you can put better discipline into that psychology and into the actual strategy. But the psychology is just Russian roulette. It's like, if I'm wrong, I deserve to crash. Because if I have enough cash in there, it won't crash. But if it went the wrong way, then eventually it will. And maybe it won't, because silver rate is $100. So at that point, you're good because you can just use the rest of the equity to go to the way of the winner. And that's how you would trade in. These are all different scenarios. Like when I mentioned it, I'll say it. This is a different scenario, but you can combine these scenarios. But this is a different scenario you can do. I gave you the moving averages scenario. You can do that on MetaTrader or even easier, investing.com. Just go to investing.com, watch the 1 minute, the 5 minute, and the 30-minute ADX and the hourly ADX. And when the 30-minute ADX is over 70, hit 70, and it says oversold, you go with it and sell it when you've been buying the whole time. Until then, you buy it. So 70 oversold is your buying point. Exit. You exit out of all buys, and you don't exit out of all buys until the 70 ADX on the 30-minute chart for whatever you want to trade or hold. And then it's really trading though based on the 30-minute chart. And then you want to actually go to your 5 minute and 1 minute at the time, the ADX at the time of the beginning of the hour. So that's what we're about missing right now. We've been recording for like halfway through this hour, so now we might have like 30 minutes left. On the way to 30 minutes left for this 4-hour camp. So we're about to go. So that can feel good, but that's how I like to get the buy up based on the 1 minute and 5 minute Osmo being positive. It's positive. That means the price is above the moving averages. That's just what it is. You got to go with the Osmo. That's why you crash. Like we saw earlier, it's the Osmo. Follow the Osmo. The Osmo's positive because it won't produce a false because it has to go all the way there. And when the sell this morning or like 3 p.m. this afternoon was actually about to happen, when the buy was finally over and I crashed because I tried to sell too early, like it literally looked at the 4-hour candle before and went the other way. Do not do that. At the beginning of the candle, pretty much. Don't do that. If anything, if you're not able to get into the trades halfway through, realize that you're halfway through the 4-hour candle. Yo, where's the last 4-hour candle that just started? 5 p.m. Goes to 9. What time is it now? 7:23. Oh, we're in the middle of it. Oh, wow. It looks like we're on our way to a retrace. This is the cash out point. This is what the other traders are going to cash out at right here. They're going to cash out. So I have 2 RSIs on my chart. One of the RSIs, the RSI2 is inside of my ADS, maybe or RBI, and the other one is inside of the other one. One RSI, the standard 14, is inside either the ADS or the RBI, and the RSI2 period is inside of the other one, out of the ADS or RBI. And then from there, we know what our RSI is. So that's one thing. Okay, we're waiting for that to be maxed out. Now, this whole 4-year period, we didn't even really know about the RSI and the indicators for like the first 2 years. Now, we were looking at the indicators the whole time on trading, and figuring it out from there. But as far as having a real breakdown, we did not even study each indicator personally. Like we came as far as Hollywood trades, like real talk, like and because he really taught me the indicators, and I was able to start studying them and researching them and implementing them and practicing them and learning to really respect them and how they really work, and realizing that was the common denominator that I was missing. So I had to figure out all the different indicators individually that work the best for me and that I had the best results with, and the ones that never switched when I was switching, and I realized I went against this one, and this one's pretty powerful. ADS is one of those last ones I just discovered, and it allowed me to have a 72 to 90-hour game, and out of that means I started at 9 p.m. last Friday. It's Wednesday night, and I was going on that trade, on that account, those accounts, 2 accounts until yesterday. You know what I'm saying? This crashed yesterday. It's like 4 days. 24 plus 24 is 48. 48 plus 48. About 90 hours. It's crazy. Crazy. Almost a whole week. Crazy. What was I doing? Following the ADX. Alright, so the Osman was positive, and the ADX was at 20. And the candle was white. So the ADX is telling you the strength of the candle. The candle's white. White candle is at 20. I told you the range goes from 20 to, 70. So boom, it hit 70. And then it hit 20. So now, on that chart, you got your buy based on the ADX just to get into your sell and go long term. So what that will allow you to do is to double before the play even starts. That's the first part of the play. It's a double play because you want to sell long term, but it's not the selling point. So it's actually at the point where it's getting ready to buy if it's going to buy. So buy it up until the selling point hits again, which it will, and then get out and sell more time. Now you just double. So you turn the 13 into like 15 to like 25, and maybe 30. And then you can get into 3 trades with 30 and 25, 30, really, 3 trades. Boom, 3 trades down. That can bring you $100. Because it can bring you $120 per trade. So you hold those 360 easy, add it to your 100 at that point or whatnot. And boom, 450 on the way to 500 whole check. Boom, 2 plays, 1 play, double play. Because you couldn't, it was like the forced double play. You had to do a force. It's the audible. All right, look, long term people were selling. And everybody's like, yeah, he knows the long term trend. Then the more experienced traders are like, but does he know that he's in the middle of the 4-hour candle and he's about to be traced because the other traders are about to cash out of their profits because they put way more in the bag than he did. And the cookies just come and he trips, and there's nothing. And now you can see, like we're about to see, that's my hypothesis. Look, long term, bro, the 30-minute ADS already maxed out over 70, but hey. That 1 minute ADX just, went down to 20 from 70. So, there's a chance that, it's going to have to, do a thing up. This is our chance. This is our only chance to go against it. And this is what we were trying to figure out for 4 years. We know how to build equity, but when's the proper time to switch over? Like, for real. All right, ADX, 70, switch. All right, so on any chart, you see that signal. Take it. You know what I'm saying? 1 minute. Alright, that's your bounce back to the long-term trend. You know what I'm saying? Boom. Unless it's in the direction of the long-term trend and you're good. Then your short's coming up. So now you know it. ADX, that's your long or your short. But you just follow the ADX on any chart. 30-minute ADX, maxed out at 70. So it's going down. So in between that going down all the way, and then up to 70, the other way, other direction, which would be up in this scenario, then you would be looking at your 1 minutes, 5 minutes ADXs to be triggered, and that's when it's safe to buy that chart or sell that chart. ADX. That's coming directly from Mr. CH ADX. That is the secret to how I did my game of 90 hours straight. That means we are very close to professional because we have been doing that the entire 4-year period. Like I said, we didn't know what time to get out and get in. The way I told you the prices and the different charts to look at, to figure it out, and the different indicators and the ranges of them, the RSI is ranging from under 30 to over 70. That's why it's over 70 and under 30, because the ADX is going to top it all off. The ADX with the Williams R percentage. So you can just go off the ADX and the Williams R percentage. When the ADX is done, then you'll see the Williams R percentage, maxed out at negative 100, red or green. Boom. Same color as the ADX. They won't ever be a different color. So boom. You know what I'm saying? ADX will be done. Then the Williams R will be done. That's the icing and sprinkles on the ice cream cone. The banana split, and we'll call that play the banana split audible. The audible banana split. Real talk, the quarterback. Yo, look, long-term investors, we are about to sell silver, but we're not selling it from a selling point right now. If we did sell it, so we would have to buy it because we're halfway through the 5 to 9 p.m. 4-hour block candle Eastern time, and then from there we're gonna have to buy it up until the price over at the top. That would be the MA5 or 200, one of them, maybe the 200 in this case. The 200. In this case, I guess, in a downtrend. So downtrend 200, boom, bouncing off the 200. So you're buying up to the 200 and selling down. Boom, that should be how it is. The 5 is the lowest number, something like that. From there, right, because it's going to push under the 5, way under, until the ADX is done. So that's how you use the different scenarios to connect them. Use the moving averages to figure out, yo, this is my Clarice Latrice. You know, my 200 is Eleanor, and my 400 is Bessie. So Eleanor, Clarice Latrice, Bessie. These are my four. And, this is where it's going to, turn into one of the, the trigger points to enter as if trade. At that point, we move on to when it does that, it's going to do that until the ADS is done. When the ADS is done, the RVI, the Relative Vigor Index, it's only on MetaTrader, not on investing.com, possibly not on trading. You have to check. It does have something that I haven't seen on investing. So now you're going to look at the RVI. When that crosses, it should cross around the same time as ADS. Because I was waiting on the RVI to cross, but I didn't wait on the RVI to cross. Alright, so it's the RVI with the ADS and the OSMA. The OSMA and the RVI are letting you know if it's positive or not. And the RVI lines is what I mean when I say they're crossing. But the RVI has two parts. It's like all of them have two parts. You have the negative, or at least the ones that have negative and positive. The OSMA and the RVI can go negative and positive. That's letting you know that the RSI is going to go to 70 or 30. So if it's positive, the RSI is going to go to 70. That's the top of the chart, top price level, which will be past the 200. Or the top of the chart could be the 200. Or touch the 200, pass it to the 300. Maybe pass it again to the 350 for silver, at least. Because I was trading New Zealand dollar as well. And I saw it didn't touch 350. Really, just like maybe 300. Just bounce up 200, if not just 200. But then I think it did. No, it did. I think it did touch 350 because I tried to switch and then it crashed. Yeah, see, bugging. Wait for the 350. Wait for the ADX, basically. Once it moves off, the levels of the moving average, just go to the ADX. That's all you're looking for. At this point, check the ADX. So we're going to go do that. And if this works, then it's like, okay, that 1 minute ADX hit 20, that 1 minute OSMA hit the, neutral to where the integers, the digits go all zeros. Real close to zero. Like on the 30-minute, it was like when the move started going up, it was already going up, but it was like up 500 points, and it just kept going up. Then by the time it was ready to go down, the price was ready to go down. The integers on the OSMA were 100, but the price was still going up. And I was just reading an article about that. When you're looking at an indicator, and the indicator digits are going the opposite way of the price is going up, but the indicator is going down. Whoa, here we go. That's what you're waiting for. And you just gonna have to watch it in between the 4 hours for that, basically. When was it? Halfway through? Halfway through. Look for the halfway through point. And that's what we just caught. We just caught the OSMA about to go neutral. So now we know it's not about the OSMA being at 500 points negative, right? And then from there it's gonna go positive. No, negative. When it says negative 100 on the 30-minute chart OSMA, then you move. Maybe even so for the other charts when it's just around negative 100, if it wasn't already that before the move it's hit. But when I caught this 1 minute OSMA and 5 minute OSMA, it was between like 5 and 50 or something like that. You know what I'm saying? Real, like under 100. So anything under 100, OSMA is going. And you're good. It's being triggered. That's your cash out. The other traders are cashing out. That's all. It's an alert saying, hey, you can cash out right now, because if you don't, it's going to retrace against you. If you get into new trades, it can crash everything if you get in too many times, especially based on this equity. Especially if you're using this equity. Yo, if you have any new trades in right now, based on this equity that's in profit, you got to get out of them right now and just close your old trades too, because it's about to retrace back to those or to the level right under it. You know what I'm saying? So you can take the equity and just go all the way up and then go all the way down. So you're just going back and forth like that. So we're going to get out of here. We've been going for 30 minutes, just giving very nice detailed analysis. This is why Isaiah calls me the Rain Man. CHADX. Thank you.